Hey guys, my name is Alan Chen. I'm a CPA and the founder of Free Cash Flow Agency, the #1 dedicated accounting agency dedicated to e-commerce and online business owners. Today, I want to talk about the numerous important tax changes that will affect your business and personal tax situation for tax year 2022. Make sure to pay attention. I'll leave a table of content in the description so you can go to the section that matters the most to you. So first, let's talk about the numerous changes to the most important credits and what has changed for tax year 2022. We should first go back to the beginning and give you guys a little background of where these tax laws originated. On March 11, 2021, the American Rescue Plan was signed into law to provide financial relief for millions of Americans. The plan included a third round of stimulus relief and expanded tax benefits that families could claim on their 2021 taxes, the ones that you filed in 2022. However, these tax benefits will need to revert to what they were before the American Rescue Plan happened or expire. And now a quick lesson on credit. Credits are a dollar for dollar reduction in your tax bills. While tax deductions are a marginal benefit, depending on what tax bracket you're in, credits are much stronger than deduction in that they are 100% write-off of your tax bill. So in most cases, credits are a lot more powerful and you should be able to make sure that you get all the credit that you deserve for you and your business. So, what are the tax benefits that are changing or reverting to previous tax rules? We have the child tax credit, the child dependent care credit, the earned income tax credit, the recovery rebate credit, the sick and family leave credit for self-employed, and charitable contribution deduction. We're gonna go over each one of these and break it down for you right now. So how is child tax credit changing and how much is it for tax year 2022? So for tax year 2021, under the American Rescue Plan, the child tax credit was expanded in several ways. The child tax credit increased from $2,000 to up to $3,600 for each dependent child under 6 and up to $3,000 for each dependent child aged 6 to 17. It was also the first time you could claim the child tax credit for a dependent child that was 17. The credit was also fully refundable. That means that you are eligible for the credit even if you didn't owe taxes. For the first time, advance payments were issued for half of the child tax credit for each dependent child. You are eligible for the full credit if your income was under $150,000 for couples who are married filing jointly and $75,000 if you are single, or $112,500 as head of household. So what has changed in tax year 2022? For tax year 2022, the child tax credit revert back to the benefits available prior to the American Rescue Plan as follows. Revert back to up to $2,000 for 2022 through 2025. Each dependent child must be under age 17 and it's only refundable up to $1,400 but no longer fully refundable. And advance payments were not issued for tax year 22. The credit's available if you earn up to $200,000 as a single taxpayer or head of household, or up to $400,000 if you're a married couple filing jointly. Next, we have the child and dependent care credit. How is that changing for tax year 2022? In tax year 2021, under the American Rescue Plan Act of 2021, huge changes were made expanding the child and dependent care credit. Changes for tax year 2021 includes the percentage and the child care expense threshold change. So you could get a credit up to 50% of $8,000 in child care expenses for one child under 13, an incapacitated spouse or parents, or another dependent that can also get another 50% of $16,000 in expenses if you have 2 or more dependents. Credit was refundable if you live in the US more than half the year. That means even if you didn't owe any taxes, you were able to get all the credits in the form of a refund. The 2021 child and dependent care credit amounts begin to phase out when adjusted gross income, or AGI, reach over $125,000. With the AGI of $125,000 or less, the credit is worth 50% of qualifying child care credit. The credit percentage decreased for AGIs over $125,000, and the credit is completely phased out for AGIs of more than $438,000. Now, what about tax year 2022? For tax year 2022, the child and dependent care credit adjusts back to the pre-2021 provision and changes back to up to 35% of $3,000 or $1,050 of child care credit for a dependent child under 13, an incapacitated spouse or parent, or another dependent so that you can work or look for work. If you have 2 or more dependents, the credit will be up to 35% of $6,000 in expenses or $2,100. The credit would be reduced at incomes over $150,000. Quite a significant decrease from 2021, so this should be considered when calculating your estimated tax payment for the year. Next, we have the Earned Income Tax Credit, and how is that changing for tax year 2022. In tax year 2021, the federal Earned Income Tax Credit was greatly expanded. Workers without kids and nearly tripled the maximum credits for those with kids. Eligibility was also extended for a wider range of employers, allowing taxpayers without kids to qualify if they were over 65 or between the ages of 19 to 25. But in tax year 2022, age requirement reverts back. Taxpayers with no kid has to be 25 or under 65 to claim the credit. Previous year's income cannot be used to help you qualify for Earned Income Tax Credit. Note, the amount of Earned Income Tax Credit is adjusted for inflation every year, and it'll be up to $6,935 with 3 or more kids in tax year 2022. The next clear question we frequently get at our agency is, was tax year 2021 the last year I could claim the recovery rebate credit? If you were eligible for the third stimulus, which is up to $1,400 for you or your dependent child, and you didn't receive your stimulus payment, you are able to claim the recovery rebate credit on your 2021 tax, but the recovery rebate credit will not be available on your 2022 taxes. Keep that in mind. The next question we get at our agency is, was tax year 2021 the last year I could claim the self-employed sick and family leave credit? The American Rescue Plan extended refundable tax credits for sick leave and family leave through tax year 2021 for both eligible self-employed and small business owners, but the credit expires after tax year 2021. Next question we frequently get is, can I still deduct up to $300 in cash donations if I claim the standard deduction? In tax year 2021, COVID relief was extended through tax year 2021 and allow you to deduct up to $300 in cash donation, $600 if you're married filing jointly on your 2021 taxes if you claim the standard deduction. But for tax year 2022, you can no longer claim the deduction for cash donations up to $300 or $600 for married filing jointly. If you claim the standard deduction, you have to itemize deduction, or you'll no longer be able to get that charitable deduction as part of your tax return. Now, another big change in 2022 is the standard deduction. Good news, it will increase for 2022. For married couples filing jointly, the standard deduction rises $25,900, which is up $800 from the previous year. For single taxpayers and married individuals filing separately, the standard deduction rises to $12,950 for 2022, which is up $400. For head of households, the standard deduction will be $19,400 for tax year 2022, up $600. So keep all these figures in mind when you're trying to figure out how much of your tax bill you're going to be owing for this year. Next, we have tax bracket changes. The IRS said it will change the tax bracket, which is the ranges of income subject to a certain income tax rate for 2022. After the standard deduction, while other itemized deductions and tax breaks has been taken, here's how your income will be taxed. For married individuals filing jointly, if you fall in the 10% bracket, which is taxable incomes up to $20,550. This is up from $19,900 for 2021. You'll now fall in the 12% tax bracket if you have taxable income between $20,550 to $83,550. This is up from $19,900 to $81,050 for 2021. You'll now be in a 22% tax bracket if your taxable income is between $83,550 to $178,150. This is up from $81,050 to $172,750 for 2021. The 24% tax bracket will be for those who have taxable incomes between $178,150 to $340,100. This is up from $172,750 to $329,850 for 2021. You will now be in the 32% tax bracket if your taxable income is between $340,100 to $431,900. This is up from $329,850 to the $418,850 range for 2021. The 35% tax bracket will now be where you are if your taxable income is between $431,900 to $647,850. This is up from $418,850 to $628,300 for 2021. And the highest tax bracket, which is the 37% tax bracket, will be for taxable incomes over $647,850. This is up from $628,300 for 2021. Now, we're going to go over the individual single taxpayer brackets. You will now fall in the 10% tax bracket if your taxable income is up to $10,275. This is up from $9,950 for 2021. The 12% tax bracket will be for those with taxable incomes between $10,275 to $41,775. This is up from $9,950 to $40,525 for 2021. The 22% tax bracket will be for those with taxable incomes between $41,775 to $89,075. This is up from $40,525 to $86,375 for 2021. 24% tax bracket will be for those taxable incomes between $89,075 to $170,050. This is up from $86,375 to $164,925 for 2021 tax year. The 32% tax bracket has been bumped to $170,050 to $215,950. This is up from $164,925 to $209,425 for 2021. The 35% tax bracket will be for those with taxable incomes between $215,950 to $539,900. This is up from the $209,425 to $523,600 for 2021. And lastly, the maximum tax bracket, which is the 37% tax bracket, will be for those that has taxable incomes over $539,900. This is up from $523,600 for tax year 2021. Since prices are rising, this probably won't equate to any significant savings. But retirees with fixed income would pay less in taxes because their income is static, but they do have a higher standard deduction that they rely on, so that their taxable income will most likely come in lower. Next, let's talk about tax advantage account changes. The IRS recently announced changes to retirement contribution limits. You can save an extra $1,000 in your 401k in 2022. This is what the IRS had announced back on November 4th. One way to reduce your taxes is to make sure that you're always maximizing your retirement contributions. Also, if you qualify for and have a health savings account or an HSA, recent changes affect you also. The individual limits for annual contribution was previously increased for 2022 to $4,950, a $150 jump. The family plan maximum has jumped $250 to $7,400. HSA balance can be rolled over from year to year and can accrue interest tax-free. Very, very powerful vehicle that you should take advantage of because it can do many things. One, it lets you put money as a tax deduction. It can grow in that account tax-free. And lastly, when you take it out for qualified medical expenses, it's also do not have any tax implication on it. It's what you call the triple threat tax deduction credit strategy. Hopefully, this has opened your eyes to the numerous credit changes that's happening and has just been announced by the IRS in the recent months. These things will of course affect how much tax bill and how much you're actually going to be paying for your tax this year. It's also going to help you do better estimated tax planning because you're going to be able to know exactly how much you're going to get for these credits that you qualify for when it comes time to file your taxes. Always keep credits and deductions in the forefront of your mind as they affect how much tax profit you're going to receive at the end of the day. Remember, the name of the game is to pay the least amount of taxes legally required of your business and individually. The only way to do that is to understand what part of the tax code directly affects you and your situation. That's why it's more important than ever to follow someone and educate yourself based on someone that understands this sector and this niche, so that you can learn from them and also benefit by getting additional money back in your pocket. Thank you so much for tuning in. If you do have any additional questions, feel free to leave a comment below and we'll try to answer and get back to you in due time. Thanks so much again and have a good one. Alan out.